I'm Matt Bishar with NAREIT's REIT.com here in Washington, D.C. at the Hay Adams Hotel for NAREIT's Washington Leadership Forum. Joining me today is Tim Pire, Managing Director with Heitman. Tim, thanks so much for joining us.
Great. It's great to be here, Matt.
When we last spoke in the summer, you noted that the lodging and suburban office sectors were being underestimated by the market. How do you view those two sectors right now?
I think both sectors are still in a very good position, and you have to look at the fundamentals of the business or the fundamentals of what's going on in the economy. When you look at the demand for lodging space, again, the economy is still doing very well, which is generating demand, and there's still limited supply. So as we've gone through earnings season, for the most part, earnings have been quite strong, and the outlook for 2015 has been good for the lodging companies. Second, as you look at suburban office, the employment picture has been good as we look at what's been happening for the last several years in terms of monthly job growth. It's been quite strong, especially when you look at the last 9 months, over 280,000 jobs per month. That's good both for CBD and suburban. And what we saw initially in this cycle was CBD office or central business district office did very well. Now that is shifting over in the suburban markets. You know, the strong suburban markets, whether it's the southeast or the southwest or California or even the East Coast, are starting to improve. So we still feel good about office and lodging.
And now looking abroad, you had said that Japan was one of the more intriguing global real estate markets. Still the case?
It is, and I think there are several reasons to kind of consider Japan overall. And Japan was a laggard last year, and it started out a little bit slow this year. But I think what's going to surprise investors is economic growth is picking up. So the stimulus that the Bank of Japan has put in place is helping the overall economy. That's one thing. Second, there's been the purchase of REITs, whether it's through the BOJ buying REITs in the open market, or now the largest pension system in Japan is buying REITs. That's positive. And when you look at the fundamentals of both the economy and what we see on the demand side of the equation, office is doing well. Vacancy rates are going down, rents are going up, transactions are taking place at record values. That's very good, and there's really no supply. So we feel pretty good about what's going to be happening in Japan during 2015.
Now, shifting to Europe, how has the situation in Greece affected your outlook for European real estate?
Well, when you look at Greece overall, it's a small piece when you look at overall the Eurozone economy, and they're kind of limited in terms of the real estate securities exposure, but there are questions relative to contagion and the broader European economy and what may happen in some of the other countries if there is not a settlement between the EU and the Eurozone, call it, and Greece. If there is, I think things will move forward in a pretty good fashion. And again, when you look at returns in the European sector for real estate securities, year to date, they're up 20%. That's a huge number, even with Greece kind of, fumbling around some volatility in the market. So Greece is relatively small. If it pulls out of the Eurozone, then I think the volatility and maybe the risk of contagion goes up. If there's a settlement, I think Europe should continue along from a real estate securities performance perspective throughout the year. So net, still feeling pretty good about what's going to happen in Europe this year, especially when you look at QE. The economy is a little bit better, and fundamentals are a little bit better overall in the marketplace for the demand for real estate.
Great. Tim, thank you so much for your insights.
Great. Thank you, Matt.
For more on this and other real estate news and analysis, be sure to visit REIT.com.